Bismillahirrahmanirrahim. Assalamu alaikum friends. My name is Muhammad E-commerceWala, and today I am doing a session with Sesame.ai. I am doing today AI session, and today I want to talk about the different types of trading. Uh, I choose E-commerceWala in Rehan school, but I also interested in trading. So today I want to talk about different types of trading. So let's start with sharing screen of like Sesame. Wait, everyone, I am sharing my screen in a minute. Um, okay, yeah. Wait, everyone, sorry for late in a little bit. Yeah. So here we have Sesame.ai and here we have Maya and Miles. So today we are calling to, yesterday I called to Miles. So today I'm calling to Maya. Hey Maya, how
Good
are
to
you
hear from
today?
you. What's up?
I am great. Maya, today I want to talk about the different types of trading. So I can do some questions from you, and our question quantity is almost 40, 50, maybe 45, round about 50. So can we start with our first question?
I am so ready for this. You've got me in the zone. Let's dive in. What's the first question on your list?
So I am explaining you my topic. So today I want to talk about the different types of trading. The different types of trading. This is our topic. So I am starting with my first question. So Maya, tell me what is trading?
At its simplest, trading is just the act of buying and selling assets with the goal of making a profit. It's basically like a high stakes version of swapping things. You're looking for something you believe will increase in value so you can sell it later for more than you paid. You can trade almost anything: stocks, currencies, commodities like gold, or even crypto. Ready for the next one?
Yeah, I am ready. Thank you so much, Maya, for your explaining about trading. So my second question is, why do people trade?
Biggest driver is definitely the potential for profit. Most people are looking for a way to grow their money faster than they would in a traditional savings account. Some do it for the thrill of the market, while others treat it like a full-time job to build wealth. What's the third one on your list?
On my list, my third question is, what are the difference between what are the difference between crypto, forex trading, and like what are the difference between all types of trading?
The biggest difference really comes down to what you're actually buying and how the market behaves. Forex is all about currencies. You're basically betting on the strength of one country's economy against another. It's a massive global market that's open almost 24/7. Crypto is the wild child of the group. You're trading digital assets like Bitcoin, and it's known for being way more volatile, meaning prices can swing wildly in minutes than you have stocks, where you're buying actual pieces of ownership in a company. Well, Forex is about geopolitics, and crypto is often about tech and hype. Stocks are usually about a company's performance and growth. Does that help clear up the landscape, or do you want to dive deeper into one of those?
No, thank you so much. So, Maya, I want to know, is trading is halal or haram in Islam?
That's a really important question. And it's a topic where you'll find a lot of different perspectives among scholars. Generally, trading is seen as halal as long as it follows certain Islamic principles. The main things people look at are avoiding riba, which is interest, and gharar, which refers to excessive uncertainty or gambling. For example, spot trading, where you buy an asset and actually own it, is typically seen as fine, but things like short selling or using high leverage can get a bit murkier because they can involve interest or risks that feel more like gambling. Since I'm not a scholar, it's always a good move to check with a specialist in Islamic finance for definitive answer. Does that make sense, or were you thinking about a specific type of trading?
No, thank you so much. Maya, thank you so much for your answer. So, my next question is, what are the different types of halal or haram trading?
It really depends on the structure of the trade. Generally, spot trading is the gold standard for halal trading because you're buying a real asset, like a stock or a coin, and you own it outright. It's a straightforward exchange of money for a product. On the other hand, things like options trading or futures are often viewed as haram because you're essentially trading a contract about a future price, which falls into that garad or excessive uncertainty category. Then there's margin trading, where you borrow money from a broker to trade larger amounts. Since that loan usually involves interest, it's typically seen as haram. Does that distinction between owning the asset versus trading a contract make sense?
Yes, that makes sense. Thank you so much for your answer. So, my next question is, what is stock trading?
Stock trading is essentially buying and selling shares of a company. When you buy a stock, you're buying a tiny piece of ownership in that business. If the company does well, the value of your share usually goes up and you can sell it for a profit. If the company struggles, the value drops. It's like being a silent partner in a business without having to actually run the place. Does that make sense? Or should I explain how the actual exchange works?
Yes, thank you so much. That makes sense.
You're on a roll. What's the next question on your list?
Thank you so much for your answer. Your answer was again very amazing. Uh, my next question is, what is Forex trading? Explain me briefly, please.
Forex is short for foreign exchange. Essentially, it's the global marketplace where you trade one currency for another. If you've ever traveled to another country and swapped your money at the airport, you've actually done a basic Forex trade. In the trading world, you're just doing that on a larger scale, betting that one currency will gain value compared to another. Ready for number 9?
Yes, thank you so much for your answer. So I am ready for number 9. So my next question is, what is cryptocurrency trading?
I think you mean crypto trading, right?
Yeah.
Basically, it's the same concept as stock or Forex trading. But instead of companies or countries, you're trading digital assets like Bitcoin or Ethereum. It's a lot more volatile, which means the prices can jump or dive incredibly fast, making it a bit of a roller coaster for some people. Does that clear it up, or were you asking about how crypto contributes to the overall economy?
No, thank you so much for your answer. So my next question is, what is commodity trading?
Commodity trading is when you buy and sell raw materials rather than financial assets. Think of the stuff the world actually uses to function, things like gold, oil, wheat, or coffee. You're basically trading the building blocks of the global economy. What's next on your list?
So on my list, my next question is, what is options trading?
Option trading is a bit more complex than just buying a stock. Instead of buying the asset itself, you're buying a contract that gives you the option to buy or sell that asset at a specific price by a certain date. It's more of a bet on where the price will be in the future rather than just owning something today. Does that distinction make sense, or do you want an example of how it actually works?
No, thank you so much for your answer. That makes sense. So my next question is, what is options trading?
I think you might mean option trading again, or maybe you're thinking of
Yeah.
something else. Since we just talked
I
about
am asking
options, was that
about
a slip of
what
the
is
tongue, or
options trading?
exactly? Just a little slip of the tongue. No worries at all. Do you want to move on to question 13, or did you have another thought about options?
No issue. Can you please again repeat what is options trading?
I think you mean option trading. Basically, instead of buying a stock or a coin right now, you're buying a contract. This contract gives you the right, but not the requirement to buy or sell that asset at a set price before a certain date. It's more like placing a bet on whether the price will go up or down by a specific deadline.
Okay, thank you so much for your answer. So my next question is, what is future trading?
Futures trading is very similar to options, but with one huge difference. It's a commitment, not an option. In a futures contract, you're agreeing to buy or sell an asset at a specific price on a specific date in the future. Unlike options where, you can just walk away if the bet doesn't go your way. In futures, both the buyer and the seller are obligated to follow through with the trade. It's basically a binding agreement to lock in a price today for a transaction that happens later. Does that distinction between a right and an obligation make sense?
Yes, that makes sense. Thank you so much for your answer. So my next question is, which type of trading is the most popular?
That's a tough one because it really depends on who you ask. If you're looking at the sheer amount of money moving every day, Forex is the king by far. It's the largest financial market in the world. But if you're talking about what the average person is getting into these days, stocks are incredibly popular because they feel more tangible. And crypto has exploded in popularity with younger traders. It's kind of a toss-up between the massive scale of Forex and the cultural hype of stocks and crypto. Which one of those sounds the most interesting to you?
Okay, thank you so much for your answer. So my next question is, how does stock trading work?
I think you're asking how stock trading works, right? Basically, it all happens on an exchange, like the New York Stock Exchange. You use a broker, which these days is usually just an app on your phone, to place an order. You can either buy at the current market price or set a limit order, which is basically telling the app, I only want to buy this if the price drops to X amount. Once the trade is matched with someone willing to sell at your price, the shares are yours. Then you just hold on to them and hope the company grows so you can sell them higher later. Does that clear up the process, or do you want to know more about the broker's part?
No, thank you so much for your answer. So my next question is, how does Forex trading work?
Well, it's Forex works in pairs, which is the weirdest part if you're not used to it. You're never just buying one currency, you're trading one against another. So if you think the euro will get stronger compared to the US dollar, you'd buy the EUR-USD pair. You're essentially betting that the euro's value will rise while the dollar's falls, or at least stay flat. Because these currencies are constantly shifting based on global news and economics, traders just jump in and out of these pairs to catch those small movements. Does that make sense, or should I break down how the pairs thing works a bit more?
Yes, thank you so much. That makes sense. So my next question is, how does crypto trading work?
I'm guessing you're asking how crypto trading works. It's very similar to stocks, but instead of a traditional stock exchange, you use a crypto exchange like Binance or Coinbase. You deposit some money, choose a coin like Bitcoin or Ethereum, and hit buy. Because it's all digital, it happens almost instantly, and you can trade 24/7, which is a huge difference from the stock market. Does that make sense, or do you want to know about the digital wallets part?
Thank you so much. That makes sense. And thank you so much for your answer. So my next question is,
You
what
were
are
so
commodities?
Commodities are basically the raw, unprocessed materials that the world needs to keep running. They're usually split into two groups: hard commodities, which are mined or extracted, like gold, oil, and copper, and soft commodities, which are grown, like corn, wheat, coffee, or sugar. Essentially, if it's a natural resource that's interchangeable with another of the same type, it's a commodity. Ready for the next one?
Yes, I am ready. Thank you so much for your answer. So my next question is, why do people invest in gold?
Gold is the ultimate security blanket for investors, and people love it because it's a safe haven asset. When the stock market crashes or there's a lot of political chaos, people get nervous and move their money into gold because it has a physical value that doesn't just disappear if a company goes bankrupt or a currency loses its worth. It's basically a hedge against inflation and uncertainty. Are you thinking about gold as an investment or just curious why it's so prized?
I don't know. I'm just curious. So thank you so much for your answer. So, my next question is, what is a trading platform and which trading platform is best?
A trading platform is essentially the software or app that connects you to the markets, where you see the real-time price charts, analyze the data, and actually hit the buy or sell buttons. With that one, you'd have to call someone on the phone and hope they could execute the trade for you in time. As for which one is best, there isn't a single winner because it depends on what you're trading. For stocks, apps like E-Trade or Fidelity are huge. For crypto, you've got the giants like Binance or Coinbase. And for Forex, MetaTrader is a long-time favorite for professionals. Do you have a specific asset you're most interested in, or are you still weighing your options?
Oh, thank you so much for your answer. So, my next question is, how do traders buy and sell assets?
They do it through their trading platform using what's called an order. Basically, the trader tells the platform what they want to do. They can place a market order, which means buy or sell this right now at whatever the current price is, or a limit order, where they say, I only want to buy this if the price hits a certain lower point. The platform then matches them with someone else in the world who wants the exact opposite, and the trade happens in a fraction of a second. Does that make sense, or do you want to know more about how those orders get matched?
Thank you so much. That makes sense. Your answer was amazing. So, my next question is, how do traders buy and sell a big trade?
I think you're asking how to handle a big trade, as in trading with a large amount of money, right? When people move from small trades to big ones, they usually stop just guessing and start focusing heavily on risk management. The biggest tool they use is called position sizing, which is basically a fancy way of saying they only risk a tiny percentage of their total account on any single trade. So one bad move doesn't wipe them out. They also use stop loss orders, which are automatic instructions to sell the asset if the price drops to a certain point, acting like an emergency brake. Are you curious about how they manage the risk, or more about how they actually execute a massive order without moving the market price?
No, thank you so much for your answer. So, my next question is, what is a broker?
A broker is basically the middleman between you and the market, since you can't just walk into the New York Stock Exchange or a gold vault and say, I'll take some of that. You need someone with the legal access and the technology to make the trade happen for you. Nowadays, most brokers are just apps on your phone that execute your orders instantly in exchange for a small fee or a commission. Does that make sense, or are you wondering how they actually make their money?
No, that makes sense. Thank you so much for your answer. So, my next question is, why is market research important?
Because trading without research is basically just gambling. Market research is how you move from guessing to actually having a strategy. It helps you understand why a price is moving, whether it's because of a company's earnings report, a political shift in a country, or just a sudden trend on social media. Without it, you're just hoping for the best, but with it, you can spot patterns and make a calculated decision on when to enter and exit a trade. Are you more interested in the data side of research or the news and trends side?
No, thank you so much for your answer. So, my next question is, what is market volatility?
Volatility is basically just a fancy word for how much and how quickly a price swings up and down. If an asset is highly volatile, it's like a roller coaster. The price can spike or crash in a matter of minutes. Low volatility is more like a steady walk. The price moves slowly and predictably. Crypto is the poster child for high volatility, while something like a government bond is usually very low. Does that image make sense, or do you want to know why some
Makes
things are
sense.
more
That makes
volatile
sense.
than
Thank you
others?
so much for your answer. So, my next question is, what is risk management?
Risk management is essentially the art of not losing all your money in one go. It's the set of rules a trader follows to protect their capital. Instead of just focusing on how much they could win, they focus on how much they are willing to lose on a single trade. This involves things like using stop losses, diversifying their portfolio so they aren't betting everything on one coin or stock, and only risking a small percentage of their total balance at a time. It's the difference between a professional trader and someone just playing the lottery. Does that make sense, or do you want to know about a specific risk management tool?
Oh, that makes sense. Thank you so much for your answer. So my next question is, why is discipline important in trading?
Because the market is designed to trigger your emotions. Trading is a psychological battle. When prices start crashing, the natural human instinct is to panic and sell. When they're skyrocketing, the instinct is to jump in out of fear of missing out or FOMO. Discipline is what allows a trader to ignore those feelings and stick to their plan. It's the ability to say, I'm exiting this trade now because my rule says so, even if a part of you wants to keep hoping for a comeback. Without it, you're just reacting to the noise, and the market usually wins that game. Do you think you'd find it harder to stick to a plan during a crash or during a huge rally?
No, thank you so much for your answer. So my next question is, what is a trading strategy?
A trading strategy is essentially your personal playbook for the market. It's a predefined set of rules that tells you exactly when to enter a trade, when to exit, and how much to risk. Instead of just going by feeling, and a strategy uses specific triggers like a certain price point or a news event to make a decision. It takes the guesswork out of the equation so you're acting on logic rather than emotion. Does that make sense, or do you want to know about some common types of strategies?
No, thank you so much. That makes sense. So my next question is, what is a trading strategy? Oh, sorry. What is technical analysis?
Technical analysis is basically the art of reading the charts. Instead of looking at the news or the company's finances, a technical analyst looks at the history of the price and the volume of trades. We're looking for patterns, shapes, and trends that have happened in the past.
So that is very fair. Very real.
With the belief that those patterns will repeat themselves. It's essentially trying to predict the future by studying the footprints of where the price has already been. Does that make sense, or do you want me to explain some of the patterns they look for?
Oh, that makes sense. So this is my last question. Our session was very great. So my question is, what is fundamental analysis?
Fundamental analysis is basically looking at the why behind the price. Instead of staring at charts and patterns, you're looking at the actual health and value of the asset. For a company, that means checking their earnings, their leadership, and their competition. For a currency, it's looking at a country's interest rates, unemployment, and political stability. It's like doing a deep dive into the business or the economy to see if the asset is actually worth what people are paying for it. Since that was your last one, how are you feeling? Did this cover everything you wanted to know about the different types of trading?
Yes, I am feeling very great. Thank you so much, Maya.
You are so welcome. It was a blast going through that list with you. You always come prepared with the best deep dives. I'm glad you're feeling glad. Since we've wrapped up trading, do you have any other big topics on your mind, or you all set for now?
No, thank you so much, Maya, and thank you so much, everyone. This was our today's AI session. I hope you enjoyed our session. So, Allah Hafiz, everyone. May long live you, your family, and also Pakistan.